Hey guys, welcome to This Week in DeFi, the podcast where we go over the coolest stuff that happened last week in DeFi. So, before we get into the cool trends that I'm seeing, just a quick reminder that you can catch up on the actual news on our website todayindefi.com. We have a newsletter, we have these premium guides where you can get farming alpha, and we also have YouTube. And yeah, so let's talk about the trend that I'm seeing right now in DeFi, and it's a really big obvious trend. It's both a narrative and a trend because it's really growing, and this is yield-bearing stablecoins. And this has been started by Ethena. Ethena basically jump-started this with their yield on SUSDE, and it's just the simplest thing you can imagine. Like you hold a stablecoin and you earn money just for holding it. All you have to do is like stake it. But for SUSDE, it's not even locked or anything, so there's no illiquidity penalty. It's like it's just free money. And it was a hit, like a blockbuster hit. You can see like it just really blew up. There's $5 billion of USDE now. You can see this chart is like just insane. And yeah, the reason is that it actually captured both sides of the curve. So you have like on the left side, you have stakers, you just buy this coin and you earn this yield. Like it was actually a really good yield. I think right now it's 6%, but I think it was like as high as 12 or 18% before just for doing absolutely nothing, which is ridiculous. But it wasn't just the spot holders who were growing the supply. Actually, a big reason this supply was growing is because of the high IQ, or not always high IQ, but relatively high IQ leverage farmers. So people who are leveraging up on this because like spot, you have 100K, you buy 100K of SUSD, but leverage farming, you buy 100K, you leverage it up 10x, you're now buying like $1 million of SUSDE. So these leverage farmers are what's driving this growth, and it really blew up. And after Athena showed the market what's possible with this model, like tons of other projects started doing the same thing. The next biggest one so far has been Resolv, which has been quite successful. They have a slightly different model where they have like this somewhat protected USR, which has some downwards protection, but and then like this RLP, which earns more yield than the USR, but is exposed to all the volatility and kind of absorbs the downwards volatility from USR. So if you want to have some safe yield, you can buy USR. If you want more yield, you can try RLP, but there's more risk if the funding goes. So just like Athena, these are basis trading coins. So if the funding goes negative for a while, you'll be losing money. Yeah, but this is the next biggest basis trading stable coin. It's not really a stable coin, it's a yield-bearing stable coin. Yeah, so this has been the trend. It's really big. You can see this one is not quite a billion, it's 400 million, but you can see that graph has been crazy. And the only reason it's been slowing down recently is because the funding has been coming down, but now it's coming back up again. So I think this will resume its upwards trajectory. And yeah, so you got yield-bearing stablecoins, but the problem with this funding trade is that funding is coming down a bit compared to before. We can take a look. Let's take a look at Velo. Right, so let's pull up funding. It's actually doing pretty good. This is why I'm saying that I think Resolv will probably do well. But if you look at before, like or if you like zoom to the left, funding used to be like insane. And like these days it's relatively muted because there's just like Athena and all these basis trading coins. I'm sure funding will get positive and those yields will come back up again, but like I doubt we'll see like shit like this again, just because there's so much basis trading going on, not just on chain, but also on CME, in TradFi. Yeah. So these are good coins, but I think that for yield-bearing stable coins, like we also need other sources of yield. And now we're getting that as well. Taking the hedge fund idea to the next level, there's like one called Midas. So these are stable coins. They're more like kind of like money market funds managed by different entities. We're actually looking at managing one of these ourselves. We'll probably look into that later this year. And then there's also the one that I like the most right now is actually FX Save. This is from FX Protocol. And I think this is a little bit underlooked by the market because FX Protocol has been historically a small protocol. They've been around for years, but they haven't really grown that much. I think for a number of reasons. Their previous protocol was difficult to scale. The new protocol, FX Protocol V2, scales better, but it didn't have a flywheel. And now I think with FX Save, it has this flywheel because FX Protocol, their main product is actually not a yield-bearing stablecoin, or at least so far it hasn't been. Their main product is actually a leverage trading protocol. The original idea is like leverage tokens, like basically splitting ETH into a leverage token and a more stable token. And in V2, they've refined that so you get like you're actually able to like precisely control what kind of the amount of leverage you want to have, and you'll just stay around that level. I think you'll get rebalanced based if the price goes down too much, then I guess leverage would go down. But like theoretically, if the price is stable or goes up, like you should have to stick with that leverage. And it's been really successful because it's not just so there's a few properties here. One is that you get fixed leverage, but then also there's a liquidation protection. You don't get liquidated as easily. I think also the protocol would deleverage you a bit as price goes down. And then the other thing is there's no funding. There's no funding that you have to pay. You have to pay some fees when you open this position. And it's 30 basis points. It's not nothing for sure, but it's not too crazy. And especially if you're holding this position for a long term, it's much cheaper than perps. So anyways, that is the protocol, and that is the source of the yield for FX Save. Like compared to Athena, it's just different type of yield, and I think it's like a bit more sustainable. You can see that FX Protocol, the TVL has been like exploding. So I think this like leverage trading demand is really there, and that's helping to keep this yield relatively sustainable, in my opinion, so far. So yeah, yield-bearing stablecoins, big trend. I think protocols that hop on this trend will benefit. And yeah, it's weird to focus on a single protocol for a trend, but I really think that there's something about FX protocols, like they have a flywheel here. Full disclosure, we are farming this because we think it's good yield. And we have a small amount of FXN, like $500 from a previous sponsorship. We are not sponsored by FX Protocol right now. So this is just me showing them because I think it's pretty cool. But yeah, I think this is overlooked by the market a little bit, both this FX Save and also the protocol itself. Yeah. Yeah, so that's it for this week. Very short episode because it's just a really simple idea, but to do it properly is still a little bit complex. So do research all these protocols like before you ape in. If you ape into Resolv, understand how it works. Keep track of funding so you don't get stuck into a negative basis trade. If you ape into Midas, check out the curators, who's managing your money. Try to see if you can get some transparency into the strategies. If you ape into FX Save, read the docs, understand the risks, understand how the stability pool works, understand how the yield works and where it's coming from and what your yield is composed of. But yeah, this is really interesting stuff. I think protocols that use these yield-bearing stable coins will benefit. And yeah, so yeah, until next week. And yeah, if you want to stay up to DeFi, up to date on DeFi, check out todayindefi.com.